Hello, everyone. Thank you for joining me. My name is Anthony Garrison, and today I'll be talking a little bit more about qualified retirement plans, specifically from the business stand side, meaning if you are a small business owner or a potential small business owner and you're considering offering qualified retirement plans, I wanted to kind of get you guys some information on how to get started with that, how to implement a plan, how to establish a plan, and how to move forward once those things are already put in place. By the end of this presentation, you will understand the many different advantages to qualified plans. I also want you guys to be familiarized with the different types of qualified plans. While there are a couple to choose from, I won't go into many details about those specific attributes of each plan. More specifically, I want to focus on just getting you guys comfortable with knowing where to look and how to look and what to look for when choosing or selecting one of those qualified business plans or qualified retirement plans, excuse me. Another thing I would hope that you would get from this presentation is learning how to select, establish, and administer a qualified plan. This leads to the next question. What exactly is a qualified plan? Well, a qualified plan is any retirement plan that abides by the rules and the laws set forth by the Employment Retirement Income Security Act. Pretty long, excuse me for that pause. But to make things easier, it all comes down to the taxation and how the contributions are taxed. A non-qualified plan is kind of put on a delayed deduction. The reason I say that is because the contributions made to this plan will not be deducted or tax deducted until the recipient receives the income, which is normally in a later date during retirement. On the other hand, a qualified plan is used with pre-tax dollars as well, but your contributions are taxed in the beginning, and then once the contributions enter the plan, they grow at a tax-free rate. And once you begin to withdraw or take deductions, they've already been taxed, and you basically paying taxes in the beginning, where when you take them out or you begin to withdraw funds, you don't have to pay taxes on them. As you can see, I've talked quite a bit about taxes and tax advantages. I wanted to definitely dedicate one slide particular to the tax advantages of a qualified plan. As you know, taxes are a major part of what we pay throughout our life, whether it's in your personal life or whether it's in your business life. Uncle Sam definitely has a way of getting his share, and there's nothing wrong with that. I mean, we all contribute as equal citizens, but it's very beneficial to try and mitigate those taxes, especially at a time in retirement. If you can mitigate those tax expenses the legal way, you'll definitely have a great benefit from that in the long run. I'll talk about the employer specifically. Employers, as a business owner, you are allowed to deduct the contributions that you give to an employee. You can deduct those as a business deduction on your income tax for that year. And also, employees pay $0 in taxes throughout the process of accumulating within the contributions plan. A qualified plan also gives you the ability to have the safety net that way your funding or your plan will not be able to be touched by any creditors or third party that's trying to get a hold of your money or get a hold of your savings. You definitely be protected through a qualified plan, and also just being able to take a loan out within certain stipulations. Employees are able to take a loan out against their qualified plan. Again, there's more details. You may have to look into that, but that's definitely one advantage for the employee. And then also just retaining employees, because if you think about it, the better your plan is or the better plan that you adopt, the more beneficial it is for your employees. And if you keep your employees happy, which should be in the forefront of running your business in the first place, keeping them in mind, getting them the best plan, it definitely increases your ability to retain those employees. There are two major different types of qualified plans. Most of the plans that we know of or that you'll hear of, they fall under these two main umbrellas. And the umbrellas will be the defined contributions plan, and then also you have a defined benefits plan. They both work similar to how they sound. Defined contributions plan is a plan that basically sets a definite amount that needs to be contributed to the plan in order to reach the qualifications of that plan. And then also the defined benefits plan is going to give you a defined or definite benefit at the time of retirement. The defined contributions plans will be more of what you will see in your regular line of work, specifically the 401k. These are the general, the frontline plans that are offered to employees by employers. the defined benefits plan. I like to kind of think of like a Swiss Army knife. These are plans that you can pull out, and also you can double up and use both. But defined benefits plans are used to, kind of lure in some of your more, how can I say this? I hate to say more important, but people that have more of a vested interest in the company, someone that's very special and dear to the company, and it makes a big difference because there are a lot of different benefits you can offer to them through that plan that you cannot offer through the defined contributions plan. So it's just a different tool that you can use, basically. Moving forward, I want to talk a little bit about the process of selecting a qualified plan. First, you must meet all requirements of Section 401A, which kind of goes back to the plan that we kind of talked about earlier. Make sure you do your research. There are many options out there. One of my favorites would be the Simple IRA. 401k is one that most employees are familiar with. Both are great plans. All of them are great plans. It just depends on what you like, what's best for your business. So it's important to do your research, figure out exactly what works best for you, understand the pros and the cons and the different obligations that you're required to abide by throughout each plan. Excuse me. And also I would say consider your employees. I mean, guys, if we're running a business, we definitely want to make sure we take care of our employees, providing them with the best plans possible. It will definitely make them happy. It will set their families up, and it'll just generate a positive flow for the company. Keeping company morale high will also result in better beneficial results within the company. Just think about your employees and consider them and what they were interested in or what they would like, what would benefit them the best, and also considering the rollovers. In case an employee wants to roll over a previous 401k plan, depending on the qualified plan that you select, there may be different repercussions to rolling over that plan. So definitely consider all of those things when electing or selecting a qualified plan for your company. As far as the installation or installing the plan, I would definitely make sure you consult with a professional. That would be my number one advice. Guys, we're all professionals at something. Speaking to whether you are a lawn care service provider, or you're a doctor, or you're a lawyer, depending on what it is, we've all went through specialized training to become experts in the field that we practice. There are also experts in the field of the same things of installing plans. We do not need to do everything on our own, so do not feel like you have to. There are many consultants that are out there waiting to help you and guide you through this process. So I would definitely recommend consulting a professional that's comfortable with the field of selecting and installing retirement plans, specifically qualified retirement plans. Next, I would highly recommend that you understand and know all of your obligations as an employer. Once you install these plans, each plan has different criteria, like we were saying before. For example, a simple IRA allows our employer to match up to 2% for contributions per year, while other plans allow up to a 5% or 6% sometimes. Another thing, a lot of the qualified plans are regulated to make sure that higher paying employees are not being offered better or more lucrative plans. So make sure you're able to offer these plans to the general population of employees, regardless of their position or their pay rank. And lastly, I want to talk about the written plan or the other requirements that I have stated here. Written plan basically is letting you know that a retirement plan or a qualified plan cannot be put into motion or accepted as legal unless it is written out and the employee is aware of the retirement plan. Moving on to the administration side of things, I would highly recommend developing some form of record keeping within your company. It just makes things a lot easier and smoother when it comes time to report or file any of these papers that are required by the government. Also, I will promote employee involvement. Anytime something changes with the plan or anytime there's an update, definitely get this paperwork out to the company employees that way they're aware of their situation, they're aware of their requirements, and they are aware of how their funds are being accumulated throughout the process of planning for retirement. In summary, I want to leave you with 4 tips to remember throughout the process of selecting, installing, and administering your qualified plan. Number one, there's no one size fit all. Each plan was designed with different advantages that can help take your business to the next level. Make sure you understand each advantage and use and choose the one that's best benefit for your company. Number two, consider the tax advantages. In many cases with qualified plans, there are tax advantages for the employee and the employer. Number three, consider your employee's true benefit. Keep in mind whenever employees are to come into the company, sometimes they come in with plans already established. It's important to make things easy for them to roll over their plans and help them to continue along their path of planning for retirement. And number four, be sure to consult with a professional that's comfortable within the field. There are many rules and regulations that a professional will be able to help guide you through and avoid a lot of mishaps that you may otherwise have to run into if you're not aware of all of the guidelines. That's pretty much all I have for you guys. Thank you for joining. You have a blessed day, and God bless.